It is 4 p.m. here in Singapore, and welcome to the Asian Banker Radio Finance Program. In the next 30 minutes, we will be discussing the advent of the crypto bank. Cryptocurrencies, in particular Bitcoins, have been hogging media headlines recently. Today, in the U.S., the first future contracts for Bitcoin have been traded on the Chicago Board Options Exchange, one of two venues that the Commodity and Futures Trading Commission have approved to do so. No doubt we'll be talking about how Bitcoins performed in its first official day of futures trading in this program later, but on a wider perspective, some have said that this has brought cryptocurrency into the mainstream, and the CFTC approval is a stamp of legitimacy for the cryptocurrency, and will make it a more acceptable, stable, and perhaps less volatile and uncertain asset class for the wider investment community to consider. However, today we actually want to talk about crypto banks, banks that facilitate the use of cryptocurrency as assets and medium of exchange. As we know, cryptocurrencies are digital assets designed to work as a medium of exchange using cryptography to secure the transaction, to control the creation of additional units, and to verify the transfer of assets. Cryptocurrencies are classified as a subset of digital currencies and also classified as a subset of alternative currencies and virtual currencies. Now, with this cryptocurrency very much in circulation in different parts of the world, what exactly is a crypto bank? What are they designed to do, and why do we need them? How will this new trend have an impact on the financial industry? And to share with us his thoughts and insight on this topic, we are very happy to have with us Mr. Vladislav Solodkiy, or Slava as he preferred to be called. He's the managing partner of Life.SREDA, a Singapore-based fintech venture capital fund. Life.SREDA was established 4 years ago. It focuses mainly on fintechs. The company was previously based in Moscow, Russia, before its relocation to Singapore in May 2015. Life.SREDA has invested over the years in 22 startups, with 7 that have made successful exits in the US, UK, Germany, Russia, Singapore, Philippines, India, and Vietnam, among others, with entities such as Simple, Moven, Fido Bank, SumUp, Artemis Group, Mobicon, Lendo, etc. In April 2016, Life.SREDA also announced the Banking on Blockchain Fund in London. So Slava is very well placed to talk about cryptocurrencies. And Life.SREDA also published a semi-annual fintech research report called Money of the Future. And Slava himself recently released a book titled The First Fintech Bank's Arrival. We want to make this session an interactive one, and we encourage and invite all listeners to participate in the Q&A after Slava's presentation, and you can do so by typing in your question into the dialog box on your WebEx screen, and that can be found on the right lower corner. If you can click on either the chat or the Q&A icon. Okay, now before we get Slava to paint for us the future of banking, or the future of the crypto bank, or the arrival of the crypto bank, perhaps we would like to invite him to make a few comments about the implication of the first future trading of Bitcoin. What do you see as key implication, especially as an investment asset class?
Hi everyone. Thank you so much that you invited me to this show. I'm glad to share my thoughts, my experience, and several of my predictions regarding the next step in fintech and blockchain community. So before to answer for your question regarding the future of Bitcoin trading, let me to explain my general idea with fintech bank creation and why we decided to launch this project named Arrival and to make this fintech bank crypto friendly, and after that to explain my thoughts regarding future of this initial trading of Bitcoin as an asset in Chicago. So first of all, I want to spend about 10 minutes to show you several slides just to explain main statements, and after that we will have about 20 minutes for our discussion, and I will be happy to read and listen and answer for your questions. First of all, seems like I'm the first person who started to talk about fintech bank concept. I wrote my first article regarding this next step in fintech about more than 1 year ago in April 2016. After that, in September this year, I presented my book named The First Fintech Bank Arrival, and in November 2017 this year, so Kleiner Perkins named very famous venture capital fund named this trend as the next big thing in fintech. And what does it mean? What does it mean, fintech bank? Because very often when I'm talking about this phenomenon, everybody prefers to ask me what is the difference between fintech bank and neobank. If we will talk about neobanks, mostly they are trying to deliver very simple product. It is current account plus banking card plus fancy app to manage your current account. And if you will check whole fintech industry, we can count more than 24, around 24 verticals in fintech. So when we are talking about fintech bank creation, first of all, we have to talk about shift of mindset of exit strategy, because previously every fintech startup which started and predicted their potential buyer, they mostly talked about we want to be acquired by a traditional bank. Right now, there are more than 5,000 fintechs across the world, and they became big enough in terms of the numbers of their clients and numbers of transactions to not to be sold for traditional banks, because after that you will have many questions how to merge not only assets but also how to merge your different corporate culture, different tech platforms, but to be merged between these new players seems like it could be a combination of 6 or 10 successful fintech services, and numbers of verticals which they are able to serve right now. It will be enough to replace traditional bank, because previously when fintech industry just started, all of them cannot solve any potential needs from customer side. And when we are talking about this merging of different players, we are not talking just about how to merge different companies. We are talking about new user experience, and it looks like Tesla case, because Tesla, it is not the first electric car in the world, but Tesla, it is a company which understood quite well that just electric car is not enough for potential customer. You have to provide ecosystem around your core product. You have to create new network of chargers, new insurance for these cars, new customer support service, new distribution channel, and finally why they became so successful in comparison with previous attempts of electric cars, because they created and delivered whole ecosystem. And when we are talking about fintech bank, it is not about how many services you are able to deliver for your customers, but it's about new user experience.
If I may interrupt, when you mention fintech bank, are you using that interchangeably with crypto bank? And if you could explain the difference. Yep, thank you.
Regarding crypto part, let me explain a little bit later, because it is just one element of this puzzle which could be added to this ecosystem. So if you talk about who can be the first customers of this fintech bank, my own opinion that we do not need to talk about some universal approach for everybody. We have to talk about fintech bank for unbanked customers. We have to talk about fintech bank for snapshot generation. Both of these customer audiences, they are not customers of any traditional bank right now. And in this case, your fintech bank do not need to replace some existing banking card in your wallet to the new one or to the new app, but you will be the first provider of financial services for this to customer audience. And freelancers and other representatives of gig economy, like independent contractors, like makers and doers, I think that this is blue ocean for ourselves, for our project, which named Arrival. And I will explain a little bit later why and we want to be focused specifically on this target audience. If we will decompose fintech bank, we have to talk about three layers: bank as a service platform, or BaaS, as infrastructure, as basis of any fintech bank. After that, numbers of fintech services. It doesn't necessary to provide all of them by yourself. You can establish only several of them as core products, and after that to implement others as third-party providers, but inside your front-end solution. And right now, if you will check last financial reports of such companies like, for example, PayPal, they also have chosen this approach not to try to copy each idea, each technology from the market by themselves, but to establish some kind of platform, and you can be easily and integrated with this platform, and to launch your startup based on this platform, and could be integrated into the bundle which will be delivered from PayPal side to their customer. And neobanks, they already proved as the most convenient interface, and you can plug in other services inside this interface. And after that, this puzzle, as I mentioned before, can be you can scale with this approach from one market to other market, because each traditional bank created in terms of some geographical borders, but if you IT infrastructure based on open architecture, on open APIs. So based on this bank as a service platform, you can be integrated easily with any other backend in other countries, and after that to plug in any other fintech services inside your ecosystem, inside your bundle. Several months ago, we met with Vitalik Buterin from Ethereum and talked about what about his opinion. Do we need to use blockchain to establish this fintech bank and the bank as a service platform of this fintech bank? And he told that it's not so necessary because blockchain, it's not, it is stupid to use it everywhere. You have to use blockchain technologies only when something really painful for your customers, and so if some element or if some open APIs of this fintech bank can be replaced via blockchain technology, so it sounds logic to implement blockchain technology. And maybe first fintech bank could be funded via ICO2 or not. So our project is not raising right now or even thinking about to raise funds via ICO. Still we are using traditional venture capital to start and to develop this approach. But right now everybody sees that this hype of crypto, this hype of ICOs, so many articles, so many people started to use idea of raising their funds via ICO so often, too often, to my own opinion. I want to skip several slides, not to waste your time. Regarding crypto, why we want to create this fintech fund as fintech bank as crypto-friendly bank? Because there is some problem on the market right now. Everybody inside the community knows about it, but nobody wants to write about it or even to talk about it on conferences or other big events. This problem linked with how all of these post-ICO companies, they will convert their millions and to use this money for their development. Because right now, if you will try to exchange some crypto lower than 50K, it will be possible because there's enough liquidity on crypto exchanges, and after that, your fiat transaction from these crypto exchanges will be accepted by your traditional bank to your current account. If you will try to convert between 50K and 500K, situation will be 50-50 because you can be on the radar of compliance service of your bank, and maybe your current account will be frozen, and they will ask you many questions regarding source of the fund. But if your transaction will be bigger than 500K, it's especially necessary for ICO-backed companies because they have to run their business. For sure, in 99% of cases, your current account will be closed, and you can easily find this information regarding banks in Singapore that they started to close such kind of current accounts. Barclays in the UK, TD Bank and PNC Bank in the US. So right now, you cannot convert big money, I mean bigger than $500,000, and to use it to develop your business. And after that, we started to meet with different banks, small banks, big banks in different countries, tech-advanced banks, not so tech-advanced, and started to ask them, why do you not want to work with these ICO-backed companies, crypto exchanges, crypto-friendly cards, crypto wallets? And they told that we were able to work with them, for example, 6 months ago, because there were not so many players, and regarding numbers of their transactions, it was some small cases for themselves. It was very small risk, but right now this market growing very fast, and they are not able, I mean the traditional banks, they are not able to take this risk. They are not able to take this risk for 3 reasons. First of all, conflict of interest with their current business, because these CEOs of these banks, they were hired by their shareholders to manage currently existing traditional business. And you cannot take risk for this banking license only because you want to establish some new, growing very fast, but still new and still small business. It is only one way to split your license, to take other banking license and to take risk for other license. Second reason belongs to employees, because they employed several thousands or even dozens of thousands employees for their banks, and these employees, they used to work with traditional clients before. And if you will try to re-educate them, to change their mindset, to talk with them regarding what does it mean blockchain, what does it mean ICO, what does it mean mining, what's about digital KYC, AML, source of funds, it will be very, very long trip, and it's easy to establish new bank with new employees which hired only to work with such type of clients. And third one belongs to technologies. All of their technologies which they already using for their current business tailored for traditional clients, and especially for geographical borders. But in case of crypto world, it's very common when you are, for example, Singapore structured company, most of your developers sitting somewhere in Poland or Ukraine. Your main business belongs to, for example, US market, and your funds, your crypto investments came from, for example, China or Brazil. How to organize digital KYC and AML process for all of these jurisdictions online. And in this case, when we spend so much time with all of these bankers and even regulators, we finally found that they are not against crypto. They are against somebody who do not want to be responsible for their transactions. So finally we decided to buy a bank by ourselves in the US, to some small banks to clear their current business from whole traditional products and services, and to be focused only on this kind of clients. We want to be transparent for regulators that we are doing this. We are experts in this kind of questions. We really understand what they're doing. We want to be responsible for each onboarding process and for each transaction from this customer.
Yeah. Okay. So Slava, you've given us quite a few things to consider from your presentation in terms of the fintech bank. If I may clarify, this are essentially banking as a platform or banking as a service based banks that provide the whole range of fintech solution on banking as a platform or banking as a service platform, building an ecosystem, or as you mentioned, the infrastructure where all the different fintech solutions can be provided on the back end that can serve different markets, different consumers, and they are crypto friendly in the sense that the initial funding for some of these fintech banks will be through ICOs. Am I correct to say so?
Yes. Yeah, you're correct. Yeah.
Okay.
If you will move step by step, first of all, you have to do your homework. So you have to have a bank which is able to work with such type of clients. I mean, to use fiat, which came after crypto-related source of funds. Second one, you have to have bank as a service platform to onboard these clients, because they are also fintech players by themselves, and other fintech solutions for their needs. And after that, to combine different fintech services which can be useful for SMEs, because all these ICO and crypto companies, they are SMEs by themselves. So we want to combine different SME fintech services like P2B lending, cloud, accounting.
Would you be able to share? Would you be able to share some examples? Basis, for example, is one of the fintech that is developing this banking as a service infrastructure and platform. In terms of a fintech ecosystem, Fido Bank recently announced the formation of Finance Bay, kind of an open banking platform that facilitate different fintech, insurtech to end users. Would you consider some of this as some of the initial steps towards what you describe as fintech banks? And when you mentioned these banks being crypto friendly, you mentioned how a lot of the funding, initial funding, will be through ICOs, and today the not exactly friendly attitude towards ICOs from some of the regulators, for example, in China and a few other jurisdictions, has been unheard of. Looking at some of the questions that has come in, what do you think with the CFTC approving futures trading of Bitcoin, what does it do for cryptocurrency as a whole, and does it have any implication for ICOs?
Yep. So sorry that I forget to answer for this question. So I think if you will talk about future of Bitcoin or any other crypto assets, most of speculations will belong to their price. And second one question will belong to, is it any value behind this crypto assets? And to my mind, all these steps, they are not the major fight via ICOs or even Bitcoin trading today on Chicago Exchange or some other steps. It's not over resources, it's over talents. And this is why. If you will check what such companies like Facebook, Google, Apple, and others are doing during the last 5 years, they're spending a lot of money to buy companies, not to buy their business as profitable business, but to buy their teams, which will be able to predict, to suggest, to create, and after that to deliver new services from these companies. These companies are already extremely profitable. They already attracted many customers around the world, and the main competition between themselves: do you have enough talents inside your company to create future products? And this company started to acquire many other startups just for their talents. And right now you can suggest if all of these crypto-related players, it could be one company. So let's name it the Bubble Inc. Can you talk about this Bubble Inc. Company as the main talent startup which attracted most of talent during next, for example, 1 to 3 years? And what could be valuation of this company? Not as number of transactions, but as number of believers, as number of talents which decided to forget about their current job and to try to establish something new based on the same rules and the same technologies for everybody. So in terms of corporate culture, it's very flat and self-organized organization. What will be the price? And in these terms, if we will talk about, for example, Japan, Japanese government, they did a lot during the last several months for crypto community, for crypto exchanges, crypto wallets, crypto assets.
They are one of the more friendly jurisdictions for cryptocurrency, right? Yes. But how does that impact cryptocurrency prices, Slava?
For example, in case of Japan, they are not talking about is it bubble or not, or this bubble can be burst sooner or later. They are talking about that we believe that blockchain technology could be extremely useful for many industries, not only for financial industries.
It has different applications.
For government services. And we do not have enough blockchain talent inside Japan. Right now we see big hype around crypto world. We want to be more crypto friendly rather than other countries, just to attract these talents inside Japan. And after that, even if this bubble will burst, we want to see them in Japan because they will decide to launch something new, but based on blockchain services. I think it's very, very smart long-term approach that you are trying to be more flexible with current needs of this crypto community, but you expect that later they will be useful for you for other blockchain-related verticals. And the second one, not only related with Japan, but with any other regulators which are thinking about ICOs or crypto right now, we have to understand that whole regulation created based on past. So you cannot find any regulation in the world which created based on the future. And in this case, you cannot manage your risk via old regulation, but you can sit together with these new players. You can educate yourself with this face-to-face communication, and you can create this new regulation together. And I think that the biggest risk it's not
could you maybe talk about the significance on this regulation, right? The move by the CFTC in the U.S. to allow future trading. Is it a recognition that cryptocurrency such as Bitcoin is becoming a legitimate form of investment asset, and by allowing futures trading, that it will stabilize and mitigate some of the volatility and hence risk in investing in cryptocurrency, and the wider implication for ICOs. We know a lot of the cryptocurrencies are built on underlying blockchain technology that has got practical application. So there is more value to cryptocurrency than just as a medium of exchange. It can be used for smart contract, and that they in themselves are valuable assets when they can be used for those applications. Could you just maybe comment, and is that the direction for other regulators, other exchanges to follow?
First of all, this step by Chicago Exchange, for sure, it's quite useful step to legalize Bitcoin and other crypto. But I think that bigger initiative is related with not crypto as currency, but related with blockchain technology itself. I mean, how to implement blockchain technology for example, healthcare or government services or any other industries. Yes, right now everybody prefers to talk about how to buy or sell Bitcoin, what is the price, how to speculate with this Bitcoins or Ethers for short term, but I prefer to think in longer term. So what about other industries which could use not crypto as exchange tool, but they could use blockchain technology itself. And third one is related to, I think that the biggest risk right now isn't related with is it bubble or not. I think that if regulators will try to fight everywhere this new economy, right now this economy in gray area, if regulators will be open enough, I'm not talking about that you are able to do everything what you want. I'm just talking about we are open to listen to you, to understand you, to share our thoughts, to listen your needs, and to create something together. So if they will be not open enough, so this new economy will go from gray area to dark area to black area, and in this case, all of our losses in terms of, potential losses from burst of this crypto bubble will be nothing in comparison with all of these problems which we will encounter later when all of this money will go to dark or black zone. So I think that regulators right now have to talk with this community, and I think that our role as this attempt to buy a bank, to convert this bank for specific needs of crypto community, it is approach of some kind of mediator between new players and the old players. Because, for example, you can find several attempts, then some young guys from blockchain community trying to attract, even raised successfully several millions via ICO to create a crypto-friendly bank, but finally they didn't buy or sell any bank before. They never met with regulators. They do not want to be in dialogue with them. So they just promising that when we will raise enough money, we will go to regulator, buy our license or buy a bank for this license, and after that we will be launched. But it's not true, because the main problem with any purchase of a bank, it's not to have enough money. It's because each purchase
has a regulatory barrier. Okay. So in terms of the regulatory attitude towards granting a fintech bank a license to operate is one of the challenge, or one of the challenges for this new generation fintech bank to traditional incumbent banks you mentioned. Okay, maybe one last question. Earlier you mentioned that you had a conversation with Vladislav Solodkiy, founder of Ethereum, on the use of blockchain, or the use of blockchain rails for your fintech bank infrastructure, and the conclusion that it is not appropriate now. But how do you see? If you could explain what do you mean by a blockchain rail infrastructure for banking?
As I mentioned, you do not need to use blockchain everywhere, because right now it's really seems very fancy if you will add blockchain to every process or every service or every company, and your valuation will be 10 times higher than today. So it's stupid, speculative approach. And the main reason of my question to him was, isn't so smart, so useful to try to implement blockchain everywhere, because everybody understands that blockchain is very promising for many financial processes and products and services. But he answered that no, the main answer, do you need to use blockchain or not, it is it enough pain from your customers? So you can predict why and how you can implement blockchain everywhere, but it will be a wrong suggestion, because the main judge on the market, it is your customer. And if it's painful enough for your customer, and he or she asking you, is this process very expensive, or very not so fast enough, or not so transparent enough as I'm expecting to, so in this case you have to think about how to implement blockchain inside. If not, you do not need to run to use it today, because also if you will track all these ICO startups, they're talking about disruption of everything. I mean, we want to disrupt music industry, we want to disrupt even porn industry, we want to disrupt everything around us using by blockchain. But it's really not so necessary, not so smart. You have to go only where customers asking you to go to solve their needs. And regarding financial services and financial processes, so as I mentioned, for example, digital KYC and AML, seems like blockchain is quite useful for this vertical, these needs. Regarding remittances, regarding ethics, regarding some other verticals, it's useful. But for several financial spheres, there is not enough demand from customer side to implement blockchain there.
Okay, great. And I'm afraid that's all the time we have for today's session. And Slava, you were discussing with us today the advent of the crypto-friendly fintech banks built on banking as a service platform that incorporates different fintech verticals solution. And some of the hurdles that the fintech startup are facing in terms of either being able to acquire banking license or being able to cooperate with incumbent banks because of regulatory restriction and concerns. On the other hand, some of this initiative are being funded by ICOs, but at the same time, players are also experiencing challenges in ICOs in terms of their liquidity or their ability to convert funds raised through cryptocurrency into physical cash or traditional currency because of regulatory KYC, AML concerns, especially when amounts go beyond $500,000 and so on and so forth. So in terms of practical use of funds is a challenge. But going forward, you're talking about some of the jurisdiction, for example, in Japan, where the approach to encouraging cryptocurrency, the setting up of cryptocurrency exchanges and initiative are receiving a kind of a more enlightened approach with the recognition of the potential application of the underlying blockchain and distributed ledger technology. Obviously, this is an area that is still very nascent, still developing, but we also see very positive steps like from the CFTC in the U.S. Just today, we are witnessing the very first future contracts for Bitcoins, and that perhaps is augurs a different approach and mindset towards recognizing Bitcoins and other cryptocurrency as a perhaps legitimate form of investment and financial assets. And on that note, I want to thank Slava for his insights and to all our listeners for calling in and for your questions. Now this session is recorded, so you can go to our website to listen into the recording. Until our next event, we look forward to meeting everyone, whether online, virtually, or physically. Thank you so much.
Thank you so much. Have a nice day.
Thanks.
So we'll be happy if our listeners will share later their thoughts, needs, and pain we need to make this Arrival project better for them. Thank you so much.
Great. Thank you, Slava.